Happy Friday! Tailored WealthSaver bringing you your Friday financial tip. Now this week, our video is going to be a little bit different. Heads up already. Reason being, I'm currently on vacation, a little bit of sunburn already, but we're on vacation this week. However, it is important to us that we still bring you your Financial Friday. So we're doing it while on vacation. This week, we are finishing up our 4-part series, moving beyond paycheck to paycheck living to begin building the wealth. The first week, we discussed how you go beyond living paycheck to paycheck by first establishing a spending plan. The second week, we talked about that amount that you need to have or that we encourage you to have in your emergency savings account to begin to go about building wealth. The third week, we talked about how to begin investing through 401k of your employer. This week, we're going to talk a little bit more investing about a strategy that sometimes works for many people and how that you can begin to allow that strategy to work for you. Heads up, this is not investment advice. Instead, we're giving you a perspective to consider and think about when you're looking at investing on your own beyond a retirement eligible account such as a 401k, a 403b, a TSP account, or an IRA. So we're just going to hit on the topics. However, we are not saying this is the only way to invest. There are a lot of different strategies. It's kind of like meeting the little pot at the end of the rainbow, which does exist. It's a lot of different ways that you can go about getting there. What matters is that you actually hit that pot. So let's jump right in. First thing we want to talk about is the hot topic that's going on right now. My fiance calls it Dos Equis. I'm sure you probably already know what we're going to talk about, the coronavirus. It has made stocks go up and down based upon speculation of what is going to happen with this virus and also based upon reduced production that's available in some countries now as a result of this virus. So a lot of people are like, oh my gosh, corona, what do I do? We're going to talk about that. So one of the strategies that often works is buy low, sell high. With the coronavirus, a lot of stocks have dipped down, not including pharmaceutical stocks. They've dipped down. So we're like, hey, if it dips down, that might be a time to buy. However, that also might be a time to just hold where you are or relook at your strategies. Let's talk about how do you know what's right for you. Number one, if you are losing sleep over any investment that you have, it is a little bit too aggressive and it's time to scale it back some. That's just starting one-on-one. If you look at it and you're like, oh my gosh, I can't go to sleep. I'm worried what if my retirement account goes away? What if I lose all this money? You're in a little bit too far, too deep at that point in time. So it might be time just like start to scale back on your own. Because with or without corona, you are probably going to be losing sleep eventually. Something was going to happen. Now, let's talk about when you decide that you want to buy. When you're looking at purchasing stocks, one of the things you want to look at is the share price, the history of the share price over the course of at least, in my opinion, 2 to 3 years at minimum. The reason why you want to take a look at that is because that's going to give you an idea of what's really going on. So in the news, it was stated that the Dow Jones plummeted, the S&P 500 plummeted, all these things happened. But if you actually stop and take a look at what's happened, at least since 1990, you'll see the change probably hasn't been that bad overall. What goes down must go up. What goes up eventually will go down. It's just the ebb and flow of stocks. So if you're looking at investing in the stock market, just realize these things will happen. Now, coronavirus, of course, that's something we don't want it to happen to anyone that we know, and we want it to end. So we're not advocates for the coronavirus at all. But this is just an example and it actually fit in perfectly with the series that we're doing. This valuable information we are making free to you. So please like it, subscribe, and share it. If you have not already subscribed, please make sure in that bottom left-hand corner, you go ahead and click subscribe. This will let us know that people are enjoying the content and that you want to see more information like this being shared. A thumbs up lets us know, hey, keep doing what you're doing. No like, no subscription, We don't know if you're enjoying this content or not, and we don't want to just give out free content for no reason. We want to make sure it brings value and adds value to your life to enhance yours as well. And drop us a comment if you like what we're saying. Back to what we were talking about. So once you've looked at the share price history of it, then at that point, number one, if we have not done those first 3 steps already, this is probably not a time to invest in the stock market. So if we don't have that spending plan, if we don't have that emergency savings account, if we're not already contributing to our employer's retirement plan, if there is one available or applicable, then looking to invest in the stock market may not be that first thing we want to take a look at. We want to make sure we have everything aligned so that we have that foundation. It's kind of like building a building. You want to make sure you have a strong foundation, because without that foundation, if something happens, everything's going to crumble. So we want to make sure we have that strong foundation to begin with before we start working our way up. Now, from there are different type of fund options you can look at, or different stock options you can look at. Mutual funds versus stocks. Yes, it goes way further into depth, but those are some of the basic things when you're thinking about investing beyond just a savings account that we want to start to look at. Hope you have a wonderful Friday. This is Taylor WealthSaver, and we will see you another Friday in the future. Please note, after this week, Financial Fridays will be moving to every first and third Friday of the month instead of being every Friday. We want to make sure we bring you value and content that's worthwhile. So we'll be moving to the first and third Friday of the month instead of every Friday. Have a wonderful weekend, and I want to get back to enjoying vacation. Actually, my vacation. I'm going to get back to that. Hope you enjoy your weekend.